Hi, I'm Mike Hodgson, the CEO of Serabi Gold, and I'm here today to talk about our last quarter results for Q2 2021 and what we're doing in Brazil with our current operation, our exploration, and our development of our Coringa project. So today, that's what I'll be talking about. Certainly, it's been a very successful quarter. We have increased our quarter by our ounces by 27% over last year's numbers. We all know that 2020 was a difficult year with COVID for many a producer, and we weren't far from that. But we've certainly seen a good improvement in the first quarter in 2021, and the second quarter is even better. And in fact, it's been our best quarter in the last 8. So it's been really encouraging, producing over 9,000, close to 9,300 ounces, which has us 6% above budget so far for the year, and nicely in line for our guidance of 35,000 ounces for 2021. Bodes well for the rest of the year. Exploration-wise, we've enjoyed a very good second quarter. We've been looking at our assets in and around the Palito Complex, our operating mine, particularly at São Domingos, at the Tucano zone, where we've had some very exciting intersections there. So we're moving that forward, and certainly we're of a view that we hope we'll be able to put a resource on that either at the end of this year or certainly more next year. It's a work in progress, but certainly some very encouraging signs coming out of there. And not just the sort of narrow vein type mineralization we've been mining at Palito and São Chico for the last sort of 6 or 7 years. There are indications that there could be some mechanized mining opportunities there as well. So that's pretty exciting. The rest of our exploration effort so far has been at the Palito mine, which is our main asset. And we're drilling there at the moment some great sort of intersections into one of our satellite deposits called Ipe and Mogno. And we're about to embark on a big drilling campaign from Palito to one of our prospects called Curatela. Just to put that into context, the Palito deposit is a series of veins, 25 veins, which are all open along strike to the east, to the north and the south. And we've got this gap to another asset called Curatela. And really, it looks like it might all join up. And you don't have to be a mathematician to see if we've got a resource over a 1 kilometer strike length. If we can actually fill in that gap of the 2 kilometers and join Curatela, we could be looking at a very significant resource increase there. So very excited about that. That's going to be starting in the second half of this year. We've got 2 rigs down there, so we're going to get a lot of news flow from exploration in the second part of this year from there in particular. And of course, Coringa. That's our big growth story, really. And the great news about Coringa is, as I speak this week, we're going to be starting finally hard rock blasting there. Which would be great to see. I hope to get down there in early August to see that with my own eyes. And I say it'll be our 3rd mine starting up. And great news, always a super exciting time. So that's where we are, Serabi, today.
Brilliant, Mike. Good to see you. Good to have you back on the show. And you look well. Can we just have a little about, and thanks for the summary. Okay. There's a lot of moving parts there. Last year, very difficult. COVID in Brazil, hampered operations, restricted what you could and couldn't do. But you still managed to produce, which is fantastic. And I get what you've just said with regards to increasing grade and therefore ounces here. But I think the big piece that was missing from last year was the inability to do any development work. So, how much money are you allocating to that? Because you got to play a little bit of catch up, don't you?
We are. We are basically going to be doing more or less an additional $3 million worth of development in 2022. That's our intent. In 2021, sorry, that's our intention. That's what was missing in 2021. I mean, I look at where we are today, and we're almost exactly where we expected to be if COVID hadn't happened in 2020. We were going to do all this exploration drilling, which we're now doing. We're going to start Coringa, which we're now doing. But it essentially was a year of limbo. Well, it was for everybody, wasn't it? And what actually happened in 2020 was, as you say, because we actually had to reduce the workforce, because we just had to make the camp smaller, the thing that got hit was exploration and development. And we essentially lived off the blocks that we had. We did very minimal development, just enough to keep the plant running. So we essentially moved from a plant-constrained operation to a mine-constrained operation. We've always been a plant-constrained operation, and now we're becoming a plant-constrained operation again. The beauty about that is, with any small underground mine, is you just mine more than the plant needs, and you cherry-pick the best grades, and you stockpile the rest. And that's where we are again now. And with that stockpiling of the rest, that's the low-grade stuff. That's the stuff the ore sorter can get its teeth into and scavenge whatever it can. And that's what we do. And that's why the grades come up from 5 grams in 2020 to over 7.3 through the plant in 2021. And that's the big difference. And that's gone straight to bottom line ounces, bottom line cost-wise. So it's because our costs are very flat, they're very fixed in Brazilian real. So, if the grade comes up, the ounces go up and it's more revenue, but the costs remain the same. So margin goes up. It's that simple. So that's what we're enjoying now. And, I foresee it continuing for the rest of the year. So grade.
One of the things that impressed me last year was the kind of planning, because you had to burn your way through that stockpile. That, in a way, kind of saved the operation. The fact that you had this stockpile which you could feed through the ore sorters, because you couldn't get staff onto site, you couldn't do the drilling that you wanted to do, and that was a kind of savior for you guys. But you're going to have to build that up again in case something else happens down the line, right?
Very, very, very much so. No, the stock was a real salvation for us last year, and blocks that were already prepared on the ground. It wasn't stock on surface; it was unbroken stocks underground and blocks that were ready to mine. So it did make our life easier, and that's why it's always good to have something in the tank. And yes, we're now all about trying to put some gas back in the tank and overdeveloping. So we are, as I say, we're intending to try to overdevelop the mine this year to build the reserves back up and to get that contingency back. It's not, I'm sitting here sort of saying we've had a great quarter, 9,300 ounces, fantastic, $80 million in the bank, which is great, best cash position the company's ever had. It's all good. It's not, there are still some challenges. And one of the big challenges we've got today, and I do mention it in our release, is the fact that we've actually got some difficulties with our getting ancillary supplies for the mine. For example, when I mean things like that, I mean like pumps and or the smaller stuff. We've got all the big toys, the loaders, the jumbos, all that sort of stuff. It's the day-to-day stuff, consumables, which you go through, pumps, vent ducting, ventilation fans, things like this that you need for development. And this is the stuff that's really hard to get. A lot of the industry in Brazil closed right down during the pandemic, several lockdowns in Brazil, just coming out of another one. The industrial centers are generally in the south of Brazil. That got hit much worse than the sort of the very rural north we're in. And it's really tough getting hold of these bits of kit. So we're using and having to repair bits of kit that really can't be repaired. We're having to do it. And beg, steal, and borrow what we can do. So that is and continues to be a bit of an impediment for us, really, on our big effort to actually push the development. But we're doing what we can, and certainly our rates are going up. They're not as high as I would like, but we're reaching part of the target on the development. So, but you're absolutely right. It's something we've got to build back up and try and do the best we can as fast as we can.
Yeah, built for a rainy day, or any problems that may come down the line, which are unexpected, like a COVID. So I thought that was quite fortuitous. The other thing I quite like was what you've done with the balance sheet. Okay, so there's a couple of deals. Obviously, you had to pay down some debt. I think you're debt free now, are you?
Correct.
And well, give me a little bit more detail on the financial position. You said you're obviously producing cash. You've got a cash here. Tell me a bit about it.
Well, we're ahead of where we thought we would be cash-wise. We obviously did the equity raise in Q1, brought in money. That money was used to make the final acquisition payment for Coringa, which we did, $3.6 million at the beginning of April. We also retired the Greenstone loan facility, and that went. And we made, as I said, that exploration, that money is the use of proceeds of that capital raise is to accelerate the exploration which we're doing. It's to make the final payments at Coringa, which we did, and it's the $3 or $4 million worth of budget we've got on Coringa this year to get the underground mine up and running. And basically, the last part of it is to actually accelerate the COVID catch-up development in the existing mine, which I'm talking about. And that's all been supplemented by the cash flow from the operation we're generating anyway. We're positive cash flow, but we couldn't afford without the equity raise to do the exploration at the rate we're doing and to start Coringa and to do all the COVID catch-up developments. There's just too much there. We make money, but we couldn't afford to do all those three things. So the money coming in has helped, but it's good. Our cash position at the end of, we've probably generating between $half to $750,000 million of free cash flow a month from the operation. So as I said, it's not enough to sort of fund everything, but it's contributing. And we're probably, I think, fair to say, off the top of my head, I can't quite remember. I think we're about $1.5 million higher than we anticipated to be at this moment in time. So, and that's come from the better than expected grades. And in fact, we're 6% ahead of budget in terms of ounces produced, and we've probably enjoyed a slightly better exchange rate and a better gold price than we actually thought we were going to get as well. So it's really good. And obviously going forward, we've got money in the bank. But if the economics stay, if we keep producing like we are, and the gold price exchange rate stays where it is, we won't sort of chew our way through our cash as fast as we thought we might. So and that's really important, because with Coringa, we're using this cash in 2021 to get it started, get it up and running. We're going to get underground, as I said, next week, and we're going to start developing the mine as hard and as fast as we actually can. And that's the biggest use of proceeds we've got today. Next year, hopefully, when we get the construction license to assemble the process plant, which I always add is actually a Coringa already ready to assemble, we'll need more cash probably, but it's going to be, it's going to be cash flow from operations plus probably some debt. The amount of debt we need is very much going to be dependent on how well our existing operation goes this year, what cash it generates. We don't foresee raising any more equity now to build Coringa. It's going to come from cash flow and from debt facility.
Okay, so share price really being knocked. So, from the highs of last year, where you were sort of, able to produce, etc., but it's been knocked, right? So you've got some catch up to do, which is catch up in terms of the production, which you're doing, the development, which you're doing, and obviously the balance sheet has been sort of cleaned up now. Are you going to be able to accelerate and do a little bit more than catch up and kind of deliver some of the promises, or the promise, I should say, of last year if it hadn't been for COVID?
I think what's really going to sort of trigger our share price is going to be our exploration success. I really do. And, at the end of the day, we're a 40,000 ounce producer. Okay, if we're 35 or 45, that's not really going to make a lot of difference. Delivering Coringa, which is going to double our production, is obviously hugely significant. But what I'm most excited about is we're having a bit of a rethink about our exploration strategy. And we are really going to go looking hard for scale. We think we've got a fantastic opportunity in the central part of our deposit called Calico and Matacobra. And rather than just drilling, we're bringing in what's called a RAB rig, which is going to allow us to really do blanket deep geochemistry over this whole area. Now, I know that doesn't sound very exciting, because people go, oh, no, we want to see intersections, blah, blah, blah. But honestly, you can blow a lot of meters by just diamond drilling, and if you're not, but I think with this RAB rig, we can absolutely superbly bullseye areas to drill. And I think we can actually generate huge anomalies with scale. And anomalies with scale usually mean mineralization with scale. And that's exactly what we're going to be focusing on in the second half of the year. So, our exploration is going to be divided in finding more of the same at Palito, which would be the kind of the banker, increasing the resource at Palito from maybe 500,000, doubling it. That's good, more of the same there. And we're doing that down at Sao Chico and Sao Domingos, again, trying to find, possibly more mechanized mining. But in the central part of our deposit, a big part of our exploration is going to be looking for scalable deposit, porphyry-style mineralization. And we've got this one called Calico, about. We've got two other ones, fantastic geochemistry and coincidental geophysics. We want to enhance those geochemical anomalies with this RAB rig. It's a rig that basically you drill on like 25-meter centers, just go dig along everywhere, and you sample the the saprolite right down to the bedrock, and you get a really good idea of what the geochemistry is, and you really can understand what's below your feet, and then we can better target the diamond drill meters. And I think that's the way to go. So we're going to be moving that forward, chasing some scale, and trying to make a game-changing discovery.
Okay, so that's obviously not going to be high grade underground type discovery you're looking for. Open pit surface. So, okay, that's interesting. And you guys got the skill set to do that, have you?
Here we have.
Okay, and how much money? When does it start? When does it finish? When can we expect to hear something about it?
The rigs, we're sourcing the rig right now. We're going to test it on this first one called Calico, and I think if it's successful, we'll be doing that huge belt we've got to go across our tenement. We talked about before. We've got this anomaly that's about 30 kilometers long and sort of 5 kilometers wide. It's a huge target, and if we just blanket drill right the way, we test it in a few areas. If it's successful, we'll do the whole thing, and I think we're just going to have a fantastic array of targets to drill.
Sounds like there's a lot to look at, Mike. Obviously,
I'm really convinced. I'm really excited about this. I really think it's going to be a huge step change for us to actually do this, and I think we're going to get to. It's we're going to have to be a little bit patient, but I think it's the way to sort of go about this. I mean, as I say, we're not going to abandon our sort of day job, which is the narrow vein, high grade stuff, which is our bread and butter, which is Coringa, which is Palito, which is Sao Chico, which is what we're doing. That's what's paying the bills. But we need to. It's not that underground to get recognition, we need scale, and we also need lower cost profile production, and that's what open pit ounces bring you. So if we can't M&A with someone that does that, we've got to find our own. Pure and simple.